And 2013 also saw the return of the IPO market in Hong Kong. China's Everbright Bank and China's Cinda Asset Management had their listings take place there. Rachelle Akuffo takes a look at how Hong Kong's IPO pipeline is looking for 2014.
The feasts are back at the Hong Kong Stock Exchange after months of famine in the city's once red-hot capital markets. More and more companies are racing to pop the champagne as they raise money through listings before the year is out. On December 20th, China Everbright raised $3 billion, turning out to be Hong Kong's biggest initial public offering for the year. The lender displaced China's Cinda Asset Management's own listing 8 days earlier, worth $2.5 billion. These billion-dollar listings made Hong Kong the busiest stock exchange in the world for December, according to Dealogic. Companies have now raised over $11 billion during the second half of the year, putting Hong Kong second globally in IPO fundraising behind the New York Stock Exchange. Strategists say the billion-dollar listings would help attract more funds to the Hong Kong market for Chinese-related stocks.
Especially for the last 2 months, we see the overall the market is improving. The market sentiment is improving. So we see a lot of IPO candidates go to Hong Kong for listing. In addition to that, for China, it is still the IPO market is still closed for the reform to be introduced. So making there are a lot of IPO candidates will move to list in Hong Kong instead in China.
And the pipeline is looking robust for 2014. Harbin Bank and Guangfa Bank are reportedly joining other Chinese lenders at the exchange in the first half of the year with their billion-dollar IPOs. An even bigger IPO worth $5 billion is in the cards for Shuanghui International Holdings, the Chinese company that acquired US-based pork producer Smithfield Foods. But the biggest buzz surrounds the potential $10 billion IPO from Chinese e-commerce giant Alibaba Group, should it decide to list in Hong Kong. And that, along with other deals, is likely to keep investors hungry for bigger IPOs for 2014. Rachelle Akuffo, CCTV.